In today's video, we are going to look at the impact of tariffs. Yesterday was a big day, Liberation Day, according to Donald Trump. Markets didn't react well. It makes sense. So in today's video, I'm going to explain why. Actually, long term, it makes sense, tariffs. But of course, short to medium term, we're going to have a lot of volatility. Good show ahead. Let's look into it. Okay, so let's start first with Trump and see what he did yesterday.
China, first row.
So
China,
as you can see here,
67%. That's tariffs
China,
charged to the USA,
European Union,
including
Vietnam.
currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it. Those with good eyes, with bad eyes. We didn't want to bring the...
So, as you can see, China was already doing tariffs in the United States, 67%. If you look at European Union, they were doing 39% for USA. So actually, Trump is just actually retaliating. It makes sense. Like China is doing tariffs in the United States, meaning if people want to import goods from the United States, they have to pay almost 67%. That's why China is so strong in terms of manufacturing, because also they have this kind of tariffs to make their own country really, really strong. So as you can see here, China, European Union, Vietnam was charging 90% in tariffs. And of course, the United States is retaliating. Now it's 34% on China, 20% on European Union, Taiwan also 46%, Taiwan 32%, India 26%. So it's just retaliating because, as he's saying in this video, for many years, the United States was losing a lot of money in this kind of trade wars. And now Trump is trying to retaliate because, of course, it doesn't make sense China charging 67% tariffs on the United States and other countries like Vietnam 90% and USA barely charging anything. This also means that there is huge trade deficits, meaning the United States is actually importing far more than is actually exporting, and that's not good for the manufacturing system in the United States. Is very dependent on other countries, makes other countries very strong. That's why these tariffs. So tariffs, in a simple way, it just puts on stuff coming into the country from other places like China or Canada. For example, if a toy from China costs us $10, a 20% tariff adds $2, and it's $12 to bring to the United States. So Trump master plan is to bring jobs home. He wants more factories and industries like steel, car parts to stay or grow in the US by making imported goods cost more. Also cut dependence. He doesn't like the USA to rely in other countries, especially like China for electronics or medicine. Also pressure in other countries, as you can see, Mexico, European Union, everyone is having, because for many years these countries were charging massive tariffs in the United States without any kind of retaliation, and he wants to make United States stronger and have really big and strong industries there, because at the moment you don't have many there. So of course, short term to medium term, you have a lot of uncertainty. You have, of course, China, one of the biggest US treasury buyers, that have a lot of US treasuries they could sell, and of course also bring a lot of pressure to risk on assets in the United States. Many people also are saying it's actually good overall. Big tariffs would lead to more rate cuts than expected. The inflationary impact of tariffs can be mitigated by FX moves, margin compression, and are ultimately transitory. So, but of course, there be the damage to business sentiment, and for, of course, people in the United States, especially short term, is big, because you're going to have taxes. If you are a business in the United States and you want to export from China or Vietnam, you're going to have big taxation. So also could lead to higher inflation. The good thing is the Federal Reserve might have to cut more rates faster than expected to try to mitigate risk. And also that could be good for companies in the United States. They could borrow more money in a cheaper way. And also for crypto, altcoins is really good, because historically you only had alt season when the Federal Reserve was doing quantitative easing. Interest rates were at zero, like they were in 2020, and then you had a big move. So yeah, medium to short term, this could bring a lot of volatility, and it will. Maybe stocks, indices will suffer, but still think overall can be a good thing if you think long term. Of course, short term, it might bring some volatility and some down pressure on risk on assets. So as you can see in this thread by Fef Demony from Crypto Banter, he explains really well what's happening and tariffs that the United States is doing. In almost every country was doing big tariffs in USA, and USA was barely doing in anyone. So as you can see, these are the tariffs that United States is imposing. But as you can see here, almost every single country was doing big tariffs in the United States. Japan 46, India 52, Vietnam 90%, South Africa 60%. So it's just United States is retaliating. And of course, everyone is being mad. But to be honest, it makes sense to do this because for so long, the United States was actually losing market share. Another important thing to see is the last time tariffs were this high, the world experienced a Great Depression. Is a different because it was in gold standard at the time. You couldn't print more money because, of course, you can print more gold. Supply is limited. It's a different situation. You have the Federal Reserve that was doing quantitative tightening for quite a while. So if they have to lower interest rates to zero and start doing quantitative easing, started to buying US treasuries and mortgage-backed securities, I don't think we go to a depression. Could we go to a small recession short term? Yes, we could. But still think, even if I think there is more downside for altcoins, and I'm going to speak why I think actually Bitcoin can also benefit from this as a digital gold. People could go to Bitcoin and gold. And of course, altcoins will suffer. Bitcoin dominance going to 70 something %, but could happen. But looking at overall, even if we go to a recession short term, and many people are saying GDP will be massively lower for the United States, makes sense. I still think overall this can be good long term. And also for altcoins, we can suffer more for sure, but also then we can have a big bounce. Also, Arthur is the co-founder of BitMEX. He also has a really good article on this. So Trump tariffs formula is further evidence that he's laser focused on reversing this imbalance. The problem for Treasury is that without dollar exports, foreigners can't buy bonds. So the Fed and banking system must step up to ensure a well-functioning treasury market, which means meaning they're gonna start printing more money, doing quantitative easing. I also agree with him. Either the Federal Reserve intervenes and lower interest rates and start doing quantitative easing to strengthen the companies in the United States, or we go into a recession. So that's what's happening. Now let's look at crypto. So if you look at Bitcoin, it's actually still holding well. If you look at altcoins, it's a bloodbath. But if you look at Bitcoin, we are still really strong, 83,300 still. It's not actually reacting badly. That's why I think Bitcoin can act as a digital gold in this era. Maybe it will be a transition from risk on to risk off as well. Because if you look at gold, it's been really strong. So yeah, we could see Bitcoin holding this. It's still holding 83K. Bitcoin dominance is rising. Of course, people are selling altcoins because of this uncertainty. But for Bitcoin, this actually could be a good thing, and people could start move from other assets to Bitcoin, as it's been proving to be a really great store of value. So Bitcoin doing really well still. I'd say overall, looking at market conditions, momentum indicators still at the lows. If you look at money supply, the move for money supply would actually be around beginning of May. It's not showing here, but it's, I'd say, has a 90% correlation with Bitcoin. So if we have a move for Bitcoin, I would say is around May. Let me try to put the money supply here. Money supply. So as you can see here, with 107 days, you have Bitcoin following money supply with 90% hit rate if you look at 1 year. So yeah, it's looking interesting when I compare these two charts. Look at this, very, very similar. Now we are having a similar move to here. We came here, double top. Now I think we could come down to low 80Ks. I don't think we lose the low of 78K. But I think around May we're gonna have a really good move for Bitcoin. So for altcoins, it's a different situation. I'm curious to see how they behave because the next few months might be tough because of tariffs and so much uncertainty. So I'm actually curious to see how altcoins do. If you look at Bitcoin dominance, is like very, very strong. If you look on the monthly to Bitcoin dominance, you only had alt season when Bitcoin dominance hit around 70 to 74% Bitcoin dominance. This was the high. This was the beginning of the bull market. At the moment, we are at 63. I think we might hit 70% actually because of these tariffs as well. A lot of pressure in risk on assets. No one wants to gamble. So Bitcoin, gold might be the way to go. So yeah, I'm looking at this as a potential top for Bitcoin around 70%. I think that's the worst case scenario. So until we hit this, or could be lower around 67, still think Bitcoin will continue rising higher compared to any altcoin. If you look at Ethereum, really, really weak. Historically, you only had alt season for Ethereum in quantitative easing, and of course altcoins followed, but at the moment is really, really weak. If you look Ethereum against Bitcoin, we are getting to bear market lows right here. So this was the beginning of the bull market, also bear market lows around 0.017. We are at 0.021. So for Ethereum, things are not looking that good. Dollar also suffering, of course, with the pressure of tariffs. A weak dollar could be good for risk on assets. But yeah, everything today is going down. If you look at macro markets, you can see US 100 going to very important area. If we start losing this, 18,000, we are going to have a big dump. This is the level I'm looking at. You don't want for the US 100 to lose 18,300. Below this, we're going to have big dump for stocks. If you look at stocks, you can see that they are all opening lower. Look at Nvidia 105, Tesla also opening at 168. So we're going to have, I'd say at least now, a red day. Let's see if we can revert, but looking overall, yeah, I think we are going lower. Now, if you look at altcoins, there is not much to say. There is more downside, of course. If you look at Dow, my biggest conviction, I think we could go to between 160 and 120. Could happen. Still, overall, I think it's the most disrupted project after Bitcoin, but because it's an altcoin, still very, very new, it has like 2 years, this could easily come here to low 100s. SUI as well. This will give us really good buying opportunities for SUI. I would say between where we are now and 160 will be really good. If we come lower around $1 again, yeah, SUI will be really easy, 10x. Sonic, another important one. If Sonic comes towards 30 cents, another very good buy. If you look at Hyperliquid, $10 could be also a very good buy. Solana, I'd say around $80 could be a really good buy as well. So those are the coins I'm looking at: DAO, SUI, Sonic, Solana, Hyperliquid, and of course Bitcoin. Very safe. Other than that, I wouldn't buy anything else. I'll be mostly in Bitcoin and really good alts. So yeah, that's it, guys. Thank you very much.